Hi all, this is Yash Ratanpal from the advisory group on banking, finance and investments of the Institute of Actuaries of India. I'm pleased to welcome you all to the fourth webinar on banking, finance and investments, which is scheduled to be on 14th August 2021 at 3:30 p.m. IST. In line with the broader objective of the advisory group, which is to spread awareness about the role of actuaries in wider areas of work such as banking, NBFCs, finance and investment companies, we are glad to introduce this webinar to everyone with a theme titled Measurement and Modeling of Interest Rate Risk in the Banking Book. As part of the webinar, we are going to be talking about the end-to-end aspects of IRRBB and how actuaries can play a pivotal role in IRRBB measurement and modeling for banks. We are going to be starting off with talking about various banking business models in the new age today, followed by the various kinds of different quantitative risks faced by banks such as liquidity risk, credit risk, interest rate risk, ALM risk, so on and so forth. We'll then be moving on to talking about and having a very detailed, thorough discussion on what exactly is IRRBB, what is the definition of IRRBB, and what are the components and the impact of IRRBB on various banks. We'll be then proceeding towards a walkthrough of the end-to-end revised Basel standards for IRRBB measurements, also known as the SRP 31 principles for IRRBB, wherein we are going to cover various aspects of the end-to-end IRRBB lifecycle, such as risk governance and oversight of IRRBB measurement, various measurement, modeling, and stress testing methodologies for IRRBB. We are going to be talking about data integrity, model risk management, and capital adequacy assessment for IRRBB practices. And finally, we are also going to be closing off with the reporting requirements, disclosures, and the supervisory review process prescribed by the Basel standards. We are also going to be doing an illustrative case study on two very important interest rate risk measures, which is EVE and NII, and we'll be explaining how these measures are actually calculated and how can they be used by banks to monitor and measure IRRBB on an ongoing basis. Finally, we'll be talking about various challenges faced by banks today when it comes to IRRBB measurement and how these challenges can lead to various opportunities for actuaries when it comes to IRRBB modeling. And lastly, we are going to have a very interactive Q&A session at the end of the webinar so that the entire webinar is extremely interactive and the communication between the speakers and the audience is extremely open. So I look forward to seeing you there, and I'm very glad to invite you to the fourth webinar of Banking, Finance and Investments. Thank you.